Hello everyone, I hope you all are doing good. Today I am here with a very important topic which is Financial Stability Report 2020. This has been published by RBI couple of days back on 24th of July. Now Financial Stability Report is very important when we talk about exams like NABARD, RBI, SEBI, PFRDA as well as other banking exams and UPSC. So you can easily expect couple of marks question from this topic. Okay, so this is very important PDF and in this video I will analyze all the nitties and gritties of this report. So first question is in front of you. Can you answer this question? Just pause and try to answer. Second question, and this is third question. If you are not able to solve all these three questions, no need to worry. After this video, you will be able to solve these three questions very easily and you will know all the basic terms like GNPA, PCR and everything. So these topics has been covered in the report as well, like net NPA, Central Commercial Bank, what is this? So everything has been covered in this report and the report is based on a reform committee. So everything will be discussed in this video. So stay tuned and watch till the end if you want to enhance your knowledge. This is our course which has been already launched, which is for RBI grade B. So you can enroll it as well. Now, what's Financial Stability Report? It's a biannual. It's a biannual. When I talk about biannual, it's twice in a year. Okay, don't confuse it is biennial. Biennial is once in couple of years. So this is not biennial, this is biannual. So Financial Stability Report is published biannually, means twice in a year. Now, what is in Financial Stability Report? In Financial Stability Report, RBI looks after everything, like what's the condition of the NBFC, MSME, banks, what is the ratio of bad loan, GNPA, CRAR, and all those minute things which put a lot of impact on the liquidity and the credit system of Indian financial system, and that eventually decides what will be the GDP of India in the coming quarter and the coming fiscal year. As you already know that RBI is responsible for the monetary policy of India. So this is very important report by that perspective. Now when I talk about what Shaktikant Das has told in the foreword, so you can see here 3 important points are there. First is extreme uncertainty not experienced in our lifetime. So yeah, I totally agree. Coronavirus was all of a sudden a different kind of situation in front of any economy, either it's China, USA, EU or India. So this is a unprecedented and extreme uncertain condition and we don't know when the condition will be good, and that's also a bad sign for Indian economy. Second is he has specifically mentioned that the global spillovers, means the global trade war USA versus China is intensifying, okay, and EU is also with USA, and the Quad, you know, USA, Japan, Australia and India. So China is different, okay. China is there isolated with Iran and Russia, all those countries which has been sanctioned by USA. Russia due to Crimea issue and Iran due to the nuclear agreement issue. So China is trying to create a different kind of scenario, but due to the USA election, global spillover will get worsened. So it has been specifically mentioned over here. Apart from that, he's also talking about risk management and the cyber security thing, because nowadays we are seeing that Twitter accounts, YouTube accounts and everything is getting hacked, and banking is a very vulnerable thing where the cyber security has a deep role to play, because if any bank is not secure by internet perspective, by code perspective, then easily Russian, North Korean, Chinese hackers as well as Pakistan's Haqqani network is doing a lot and they are targeting India, they are hunting in packs, and you can go and see that in the dark web. There is a portal named Dark Web where you can talk with them and also get the insight how hackers work and what they do. So moving over, the biggest point of this report is this thing, 12.5% by March 2021. Gross NPA will be 12.5%. And now RBI have done different kind of stress test. They have done a stress test, 4 kind of stress test. And in the worst condition, 14.7% will be the GNPA. Now you would be thinking, what's GNPA? See, NPA is when somebody doesn't pay interest or principal amount more than 3 months, means 90 plus days, then that's called bad loan or NPA. Bad loan is same as NPA. Now what's gross NPA? Gross NPA is when somebody doesn't pays anything after that period, and that includes principal amount plus interest. Okay, so if you are not paying principal amount as well as interest, then it's written off and it's called as gross NPA. When 90 days is over and it's about to be written off, then it's called gross NPA, means it reflects in the balance sheet of the banks. Till 0 to 90 days, it doesn't reflect in the balance sheet. The officers and the credit department tries to get the NPA, try to get the cash from the loan and those people and industrialists, but if it doesn't happen, it's written off and it's known as gross NPA. So it may be 12.5% as well as 14.7% under very severe stress. Now this is the Chief General Manager's publication, where he has written like few important points which I want to mention over here. That first thing is, this is a half yearly report which you can see from here, and simmering global geopolitical situation, tension, economic losses on account of the pandemic are major downside risk. So 2-3 points are again mentioned here: global geopolitical tension, which again spill over on trade, and economic losses on account of the pandemic are major downside. Apart from that, here it has been already mentioned that the CRAR, SCB, GNPA, these terms as well as PCR. So what we have seen is all these things have reduced from March 2020 compared to September 2019. So when I talk about September 2019 to March 2020, things have improved a little bit for Indian financial system as well as banking system. But now after Corona, it's going downside, it's getting worsened. So that's a bad sign for Indian economy. And the macro stress test, which I am talking about, that had already shown that 8.5% may be the GNPA rise to 12.5%, and under severe stress scenario, it may be 14.7% as well. So this is a direct forward from grade E manager of RBI. So let's move forward and see what's there in the next slide. So in the last slide, we have seen 3 terms: CRAR, GNPA and PCR. So in this video, I will explain all these terms for you. Now, what is Financial Stability Report? This report came in picture after 2008 Financial Sector Reform Committee headed by Mr. Raghuram Rajan, the man who don't need any introduction, IITD gold medalist, IIM Ahmedabad gold medalist, and Sloan Institute of Management PhD, and now he has got 3 PhDs from different universities like London School of Economics, Hong Kong's top university, as well as a European private university as well. So he has 4 PhDs under his belt, and he has written many books, and 100 points, total 100 points was suggested to Indian government in 2008 Financial Sector Reform Committee headed by Raghuram Rajan, and Uday Kotak and people like Arvind Subramaniam were also in that particular committee. So that was a very critical committee, and Narsimhan committee, Bimal Jalan committee, Raghuram Rajan committee are extremely important from exams perspective. Okay, so in this committee, the role was to, Pranab Mukherjee told that we need a committee which can help us to give a mindset through which we can get the financial structure and we can understand the financial know-how of what is going in Indian economy. Okay, so for that only, means what's happening in the Indian economy financially. When I talk about liquidity, credit, so all these things are very mixed. India is a country of files, where files do a lot. There is not that much data. When I talk about 2008, there was not that much data. So this was a very extremely important committee. And this is not a statutory body, so you can clearly see here, this is not a statutory body, and apart from that, all these tasks are done by this committee, Financial Stability, Financial Sector Development as well. So in 2010, the Finance Minister of India, Pranab Mukherjee, allowed this reform to be established in RBI after 2020. After 2010, publishes 2 reports every year, and this is the 21st report published in 2020. Okay, so in this slide you can see the composition of the council. So the chairperson is Union Finance Minister of India. So the question may be asked in exam, who is the chairperson of Financial Stability Development Council, which publishes financial stability reports? So the answer will be Nirmala Sitharaman, who is enjoying halwa before the budget day with Anurag Thakur, and here is Department of Economic Affairs Secretary Atanu Chakravarti as well. So these people are also the member of this committee, RBI governor, SEBI, IRDA, PFRDA and IBPI chairman, all these are regulatory bodies. So these people are part of this committee. Now what's the task of FSDC? So here you can see what are the tasks of FSDC. Majorly five things are there which RBI looks after in Financial Stability and Development Council report. First is financial stability, second is financial sector development, third is macro-prudential surveillance of the economy, fourth is financial literacy and financial inclusion, which is extremely important, the top agenda for any government, financial inclusion, and fifth is inter-regulatory coordination. So the responsibility of FSDC is all these five, and the MCQ can also be created from these 5 points. Okay, so do memorize it, do take a screenshot if you want to do so. Now let's move to the next slide. What FSR says on situation of NPA? Now it's very critical. So the bottom line is a stress test was conducted by RBI, okay, and they have suggested that COVID-19 crisis could push Indian banks gross bad loans, okay, means gross NPA, because bad loan is equal to NPA, I have already mentioned, to their highest in nearly 2 decades. So if under very severe stress, the GNPA may go to 14.7% and in normal condition it may go to 12.5%. So these two data are very important. Let's move to the next, how the stress test works. So nothing more specific has been mentioned in the report from RBI like how a stress test work, but 4 criteria has been mentioned. They are like baseline scenario, medium stress, severe stress, very severe stress. So under 4 criteria they have put the data like what will happen in what scenario. And all these are based on macroeconomic indicators. When I talk about macroeconomy, we talk about a whole picture like GDP, GNPA, CRAR and all those things. When I talk about microeconomic, it's like the granularity of the economy, okay, like the salary of the people, what's happening on the ground, very micro things. That's called microeconomy, okay. So what's there in RBI test scenarios? So all 4 scenarios have been compared here. So here you can see in this thing, GDP growth is -4% in green mark, okay. So baseline, medium stress, severe stress and very severe stress. In baseline, you can see -4%, here you can see -6%, here you can see around -7-8% and here you can see -10%. So in double digit GDP growth going in negative, all these data are in negative. Similarly, the combined gross fiscal deficit to GDP ratio. Now what's fiscal deficit? Fiscal deficit is the difference between the government's expenditure and the government's income, okay. So when deficit will occur, when the expenditure is more than the income, then it will be a deficit. If expenditure is more than less than income, then it will be a fiscal surplus. But India is a very good economy. Here we only listen about things like fiscal deficit and trade deficit, and that's why we will talk about fiscal deficit. And the same goes for trade deficit, like if the trade is more with any country, then it's trade surplus. If it's less, then it's trade deficit, okay. So the thing is, you will replace the expenditure and income with export and import when I talk about trade deficit. So I will leave that for the next video. Now let's talk about CPI inflation. So it's consumer price index inflation. Earlier we used to measure inflation on WPI and that was used for all those government things, but now CPI inflation is taken as the base thing, okay. The WPI is also calculated, but CPI is taken as the thing for government schemes and all those important. The reason was WPI wasn't able to give a good picture, and that's why the government moved to CPI inflation. And CPI inflation of India is currently around -6 to 7%. It's 6-7%. WPI is in negative. So CPI is basically what you pay, and WPI is when the product comes from factory. Like if Parle-G gets out of a Nasik factory, then its cost may be 2 rupees per packet, but when you buy it, it's 4 rupees. So I think you know the difference between CPI and WPI now. After that, this is weighted average lending rate. So it's again, you can see by the term lending rate. So it's weighted average lending rate. So that's a statistical term. And this is again export to GDP ratio. Let's assume that the export of India is $340 billion. And the GDP of India is, let's say, around $200 billion. So that ratio is known as export to GDP ratio. So in severe stress, what we are seeing is the export to GDP ratio is declining. Okay. So what that means we are exporting less. When this will decrease, when the denominator is higher and the numerator is decreasing. So less export is always bad for any economy. Current account balance to GDP will eventually become in negative if our export to GDP ratio is going bad. So this is a full analysis of all these things, and here you can see CPI inflation will go high in severe condition, and fiscal deficit will also increase in severe stress condition. So all these things are giving you a tan 45 slope graph, and here it's tan 45 in decreasing order. So this is bad. Again, this is bad for me. So all these, I think you get a crux picture. You can take a screenshot if you want. Moving forward, we have talked about few important points earlier, like PCR. So what's PCR? See, any bank, like if I talk about SBI, if it gives a loan of, let's say, 1000 crore to Vijay Mallya, so they keep away like 100 crore rupees as PCR, because they know that they have a 10% chance of losing their money. So they keep 100 crore rupee as PCR if in case Vijay Mallya ran away and doesn't pay the loan amount. So what amount of money a bank is keeping as a coverage is known as provision coverage ratio. So by the name also, in economics you can easily identify any term like provision. So it's for provision and the coverage ratio. So here in this case, the provision coverage ratio will be 10%. Same has been mentioned here. It is the ratio of provisioning to gross non-performing asset. So the gross non-performing asset may be 1000 crore when Mallya will run away. It indicates the extent of funds a bank has kept aside to cover loan losses, and it is calculated as pre-tax income plus loan loss provision upon net charge off. So this is the formula which can be asked in the finance part of RBI grade B exam as well. A higher ratio means the bank can withstand future losses better, including unexpected losses beyond the loan loss provision. So 70% is the ideal condition. If a bank have more than 70% PCR, then it's good. Like Bandhan Bank, HDFC Bank, such kind of banks have a good PCR, and if your money is with them, then it's safe. Like you have seen earlier, LIC crisis, PMC crisis. So in case of LIC, the PCR was very low. Sorry, here I have to mention Yes Bank, not LIC. So in case of Yes Bank, the PCR was very low. Coming to the next point, type of NPA. So what we have seen in the report, different type of NPAs has been discussed. So this is NPA, GNPA, net NPA. Now let's again take an example. In COVID period, people ask for money. Okay, so let's assume your friend calls you one day, hey man, give me 1 lakh rupees. So he takes a loan of 1 lakh rupees, and you ask them that, okay, I will charge you 10% of interest annually. So he said, okay, no issue, I will pay after 1 year. But after 1 year, he says that, sorry, I don't have any money, I am not able to pay. Whatever you can do with me. So this is not NPA. But if for 3 months, he is saying the same thing and he is not paying the amount, either interest or principal amount. Okay, this is the point to be noted, either interest or principal amount, then it will be a NPA. Okay, after 3 months, it's a NPA or bad loan. After that, you will ask him that you will pay or not. So he will switch off his mobile and run away simply. So in that case, when he is not picking up your call like Vijay Mallya and Nirav Modi did, so then it is declared as GNPA when principal is also lost and written off NPA. So this is the very bad case for any bank or financial institutions. Now the NPA limit is 90 days, but due to the pandemic, the RBI has given a moratorium, means an extended period in which you can extend your loan and no bank can declare it as NPA, and till 31st August you can save your money and you can't be pressurized by any bank to pay the money. And I think that after August also the RBI will allow it for another quarter because the situation is not getting better. Now what's net NPA? So what I have already mentioned, that PCR, bank keeps some amount of money for the PCR thing. Now here you will keep, if you know about your friend that your friend is risky, so you will keep some amount of money. Let's say if you are giving 1 lakh rupee of loan, so you will keep 20,000 rupees as PCR. So the PCR ratio is 20%, but the net NPA will be gross NPA, means 1 lakh minus provision, which you have kept as 20,000, which you know that your friend is not so good. So the net NPA will be 80,000. Okay, and fortunately in our country we have 4 banks, IOB, CBI, UCO, United, and is under PCA. Why they are under PCA? Because they have not followed these RBI guidelines, net NPA over 10%, negative return on asset for 4 consecutive years, and the CRAR, capital to risk asset ratio, is also above 9%. So if you don't follow these 3 criteria, and there are different different categories. If you are getting into that category repeatedly, then RBI will put you under PCA, and when you go into PCA, you can't do the lending activities, as well as the salary of the employees will not increase. So we have seen a few days back that bipartite settlement has been done, and there is also one thing, like if the performance is good, if any bank is getting more profit, means 5% profit, then the salary will also increase, and the performance of bank is linked with the performance in the salary of an employee. So in this case, when your NPA, GNPA and net NPA is bad, then the salary will also become stagnant. Okay, so I have explained all these things in a very lucid language for you aspirants. And this is again CRAR. So in PCR we have seen that we are keeping some money for the coverage. CRAR is also similar, but here we keep, as the definition also mentions, that capital to risk awaited ratio. So we keep capital, assets and compare it with liabilities. Okay, so here you can see tier 1 CRAR, total CRAR. So here capital fund, risk RWA and operational risk, everything is captured, and then only we call it as CRAR. So if any bank has a good CRAR, then it's always good to keep, like in Basel III norms, stipulated capital to risk weighted asset of 8% is there. So RBI has said that you have to keep at least 9%, okay, and it's for SCB 9%, but they have emphasized that 12% is the best case. You have to keep it as 12%. So CRAR is a hybrid form of PCR. Okay, so basically any bank is trying to diversify its loan risk, and Basel III, you know that government is putting more recapitalization money in Indian PSBs just to improve the CRAR and all those things. Few days back, Raghuram Rajan also said that Mudra Bank loans have gone full NPA. After that, we have seen the COVID pandemic. So the situation is very severe because our financial stress is a lot more on banks, as well as the system is not performing so good. Now there is a good news on bad debt. Here you can see a decline in the bad debt for public sector banks, but now you will see this going up because of Corona. So the good news is turning into again a bad news. For private banks, you can see this graph is somewhere here, and the foreign banks are doing good. Now you may ask this question, why public sector bank is performing like this, and why private bank and foreign bank are doing so good? So you can personally visit for a loan in PSB, private bank and foreign bank. You will easily understand how they disburse the loan. So that's the reason why the PSB is performing like this and why these banks are performing like this. Basically, they don't listen anyone on call. They give the loan on facts and figures and data, but it's not in the case of public sector banks. We saw earlier what happened in demonetization also. So if you are a student, if you go to any bank and ask for 5 lakh rupee of loan, there is very less chance that you will get a loan. But if any influential person is going to bank and they ask for 50 crore loans, there is very high chance that they will get the loan, and that loan will be converted into NPA or GNPA or net NPA under severe circumstances. So that's an explanation for you why public sector banks are suffering, and the system is to be blamed for that. Like Rahul Gandhi mentions every time, like the system is not working. Coming to the next point, again here are some important points from the Financial Stability Report. The ratio of total advance stood at 8.5% in March 2020, but it will rise at 14.7 and 12.5 under baseline scenario or very severe stressed scenario. And the RBI's stress test covered 53 scheduled commercial banks. Now, what's SCB? So, 1934 RBI Act. So, which so over bank follows this guideline and comes under RBI Act 1934 is known as scheduled commercial bank. So, many RRBs, few scheduled private banks also come under the scheduled commercial banks. Now here you can see how is the graph increasing for public sector bank for GNPA. Okay, now it's gross NPA. Private banks is a little less, foreign bank at very low risk, and SCB again is at high risk. So if the GNPA is 15% plus, so automatically these banks will come under PCA. Now it's up to RBI what they are going to do, whether government will inject more money to increase the PCR and CRAR of any bank, or they will just change the criteria of PCA. So that's a thing which is in the belly of future. So we will see that in the future. Now you may ask, sir, why is this happening? Why India is suffering this much? China is not suffering that much. Why our country is suffering this much? In this whole video, you are just blaming and giving all those bullshits. So the answer is very clear. First 3 points as mentioned in this report is global pandemic is to be blamed, which is a Chinese virus. Second is prolonged slowdown. So we have seen a slowdown before March also due to the severe NBFC crisis like NBFC crisis, ILFS, etc., as well as non-performance of our financial sector companies like ILFS and a few scams which happened in PMC, etc. And moratorium is also a reason. Like if somebody is not going to pay the loan for, let's say, 6 months or 1 year, so automatically the interest will increase, and the interest somebody is not going to pay in that period. So moratorium is also to be blamed for the GNPA rise as well as the net NPA rise for any bank. Now these 3 conditions are explained by me. These 3 conditions are not mentioned in the report. First is Indian economic model. Now when I say about Indian economic model, India's economic model is consumption based economy. When I say consumption based economy, let's understand it from 1947 or behind that. Before 1947, Britain was ruling our country and our GDP was either in negative or zero, because what Britain was doing, they were just getting the raw materials out of India, they are manufacturing the goods in England, and they were again pushing those. So what China is currently doing, same thing was Britain doing before 1947. They were dumping those materials to India and the raw material was from India, but nowadays India gets some peanuts from China for exporting our raw materials, and then China pushes back those products in products like a smartphone, toys, etc., and machinery and all those things. But in 1947 and before that period, Britain was totally monopolizing Indian economy. So what happened after 1947? After 1947, our country was pathless. When I say our country was pathless, means there is a very deep problem in Indian people's mindset as well as system mindset. When I talk about system, it's government. Whenever we don't get a stick, okay, if somebody doesn't beat that very harm, means if we are about to die, then only we do something. Let me justify my statement. In 1950 to 1960, our country was struggling with malnutrition and bhukmari. People were not able to get 2 square meals. So MS Swaminathan in 1960s tied up with Israeli scientists and the Green Revolution occurred. So after that, we were dependent in agriculture. Okay, so when the condition arrived, then only the agriculture revolution happened, and Punjab, Haryana were the states which get maximum benefit from that. After that, few states like Tamil Nadu, Andhra Pradesh, Telangana, they improved their irrigation and their farmers also did well later on. But states like UP and Bihar didn't perform good in irrigation, and that's why their farmers are very low when I talk about GDP per capita income. Now, after agriculture till 1990, so 1962 to 1990, what was happening in our country? Red tapeism, Lal Fitasahi, and permit Raj, license Raj. If you are a UPSC aspirant, you know what I mean. So in 1960 to 1990, all those things were going in our country, no structural reform, nothing. And that's why when China was changing their economic policy in 1980s and they were moving from agriculture economy to manufacturing based economy, our country was sleeping. 1980 to 1990, we lost total 10 years. Let me give you a fun fact. 1980, India's electronics import was more than China in 1980. And now we import around $100 billion of Chinese electronics. And this comes from various routes like Taiwan, Hong Kong, Singapore, and Bangladesh nowadays also. So this is not captured totally, but India's electronics import is going to be more than the oil import in coming time. Okay. So you can just imagine the China changes their policy in 1980s and they are just reaping the profit in 2020. Okay. And they are challenging USA as well. So China did a very good thing. Any economy moves from agriculture to manufacturing and then to service based industry, like the Scandinavian countries and the USA in itself, as well as European countries. But what India did after 1990, India was almost bankrupt, went to IMF, LPG happened, and then we did some manufacturing thing. And what's our manufacturing ratio in our GDP? That's you all know it's around 25 to 30%, and agriculture is 15 to 16%, and rest is around 55% is service thing. Now service sector government has not just pampered the service sector also. In service sector, people like Narayan Murthy, they went to USA and then they came back, and what they did, they founded companies like Infosys. Later on, Tata, TCS, Mahindra & Mahindra, Tech Mahindra. So these people set up IT companies, and today the whole IT industry is of around 200 billion US dollar. And the multipolar effect is on multiple industries like tourism, real estate, as well as hotels and consumer products. So this 200 billion industry is almost of $1 trillion, because these people only have high purchasing power. So they invest in tourism, they invest in real estate, they invest in automobile, they buy good things. So they drive $1 trillion of economy of India. So service sector is critically extremely important. And in this, you can also add government employees and bank employees, all those people as well, because they are also earning good income. So what I am trying to say, our Indian economic model is still consumption based economy. We are exporting just $340 billion of exports, and China's trade surplus with USA is around 400 to 500 billion dollar. So you can imagine what our economy is doing. So our economy is consumption based model. Whatever we consume, then only the wheel of economy runs. Okay, and when we consume, then companies manufacture. When they manufacture, the jobs generates, and when job generates, again the consumption occurs. So the whole economy runs when this consumption happens. When consumption is zero, like in Corona, the consumption is zero, then our economy is failing. Why our economy is failing? Because consumption is zero. So our economic model is consumption based model. That's why we are failing. But if our model would have been export based model, if we would have companies like Amazon, Apple, Netflix, Microsoft, then our country would have thrived, because Apple is going to be a $2 trillion company very soon, and that's more than the GDP of many countries. After that, poor infra, we don't have good health infrastructure, education infrastructure. That's why we don't have good companies. After that, federal structure is also there. Like if any good scheme will be launched in Delhi by central government, few states like West Bengal, Kerala will say that they are not going to listen to central government. And similarly, if Kerala is doing something good, central government doesn't listen. So the federal structure is going horizontal for India. So this is my analysis. You can't agree. If you don't agree, you can comment in the comment box as well. But this is my personal assumption, and I assume that these are also the reason for the bad economic shape of current Indian financial system. So now we have talked a lot about everything. Now the three questions which I talked about in the beginning of the video. Who headed the Financial Sector Reforms Committee 2008? So the man Raghuram Rajan, and he's the first Indian to become the chief economist at IMF. The second is Geeta Gopinathan. Next question, an Indian SCB, scheduled commercial bank, should keep its net NPA under what percent limit to not be listed under PCA by RBI? So it's 9%. Next question is, if a bank has PCR as 1 crore and GNPA is 10 crore, then what will be the net NPA? So the net NPA is nothing but the difference between GNPA and PCR. Okay, what I have already mentioned to you, that if you are giving your friend, let's say 1 lakh rupees, and you are keeping 20,000 as PCR because you know that your friend is this honest, so the net NPA will be 80,000. Okay. So in this case, 10 crore minus 1 crore, so it's 9 crore. Very easy question. But initially it was looking so tough. So that's the beauty of economics. If you get good example, get a good insight, then anything is easy. Whether it's CRAR, PCR, NPA, net NPA, return on asset, anything. You can see here our course is already active. If you enjoyed my video, if you loved getting some insights from my knowledge and all those things, so you can enroll for our course, which is very affordable. Here you will get full ESI static plus current, finance 2020 static plus current, management, English descriptive, where we will check your paper and give you feedbacks as well, and the GK impact, for which we are famous and people have scored around 73 marks in GA out of 80 last year. So we use an extensive process to check the relevancy of the data. We are doing this work since last 5 years, and many students are turning to LYT mode to utilize their precious time, because when we say LYT mode, it's leverage your time. Your time is very important, and if you are at age 21 or age 29, in both cases, you should respect your time and get the selection at the earliest. Don't wait this pandemic to get worsened. So thank you for watching the video. You are capable of more than you know, and if you think that I have enhanced your knowledge by an iota also, then do like the video so that I come to know that my efforts have not gone into the vain. And don't forget to subscribe the channel, because I will also upload the second part of the financial stability report. And do comment how you feel about this video and what improvement I can do in the further videos. Do share the video in any Telegram as well as WhatsApp group you are present in. Thank you for watching the video. God bless you all, and take care of your family in this tough situation. God bless you all. Thank you.